Okay, I think we start. Today we have an explosion in the power, I don't know what you call it, okay, near the restaurant. Then we called the Naga people come. Then the Naga say they need 4 hours to repair. The time is 11 plus. So we think, okay lah. Initially they tell us better cancel the afternoon class. So okay, but I think that I scared. You know, the Naga sometimes they want to say things don't know true or not true. So I say, never mind, we postpone the class. And then by 12 something done already. Okay, then the message all sent out already, so I feel very bad. Okay, now, so I think I start with the less important area in case those who come late, at least they don't miss so much. Okay, go to page 91. Page 91. Okay, there it says that using the information above, assuming that a proportional, another name for proportional is multiplicative, okay? So a proportional or multiplicative model forecasts the sales for sauce for the last 2 quarters of 2012. And then you should calculate your seasonal adjustment to 4 decimal places. So you're going to work out your adjusted seasonal variation. Okay? So you're going to work out the average adjusted seasonal variation. Okay. And then part B is actually a theory that they are looking on budgeting. Now what is the impact that the budgeting style and inaccurate sales forecast will have on their staff and the business? So it's a very well blended question with 10 each. Okay, so one is a very easy computational, one is a not very difficult theory lah. Okay, but you know lah, theory means student will say it's very difficult. Okay, now, so they say sauce manufactures and sells cartons of cooking sauces which deteriorates over the time, and they must use within a period of 3 months. So you have very short expiry date. Okay. Now over the last 2 years, sauce has experienced all kinds of problems. The financial and sales directors believe this to be a result of persistently unrealistic sales target imposed by the managing director, who makes forecasts based on his own subjective and overly optimistic view about the future. Now, this is how they had their budgeting style, right? The style that the managing director is what? Impose budgeting. That's what the question why they ask you in part B to comment about the problem. Okay, they're using imposed budgeting. That means I say you listen. Okay, and this style has been very subjective and overly optimistic that it become unrealistic, and that's why it gives rise to a lot of problems. Okay, now while an incentive scheme is in place, the company has not hit its target for the last 3 years. So no bonuses have been paid out. That means you have incentive also, no one seems to be getting. It's like I'm telling you that I will offer 5,000 ringgit to any student who score 95 marks and above for F5. And then virtually you'll be thinking 95 marks, who can score right now? You know, I'm not saying you can't, but it's overly optimistic that maybe after a long while you might get 1 or 2 students. Okay, now, so they say that the financial director has asked you to forecast the sales for the last 2 quarters for 2012, hoping to present these figures to the managing director in an attempt to persuade him that the basis of forecasting needs to be changed. The production volume are also currently based on anticipated sales, rather than actual order. That means you are making production using your forecast. So if you make production using your forecast, then what would the problem be if your forecasts are overly optimistic? You're going to make a lot, right? So when you produce too much, and then source is something that they say is very short line one. Correct? Huh? Very short line, is perishable. So if 3 months you don't sell, then immediately your product become expired. Okay, now go on. Huh? The following sales figures are available for the last 2 years, and all figures represent the actual sales except for quarter 2 2012, which is an estimate. But the director is satisfied that this estimate can be relied on. So now they've given you the sales for 2010, 11, and 12, and they would like you to find what sales quantity going to be for these two questions. Okay, the following centered moving averages have been calculated using a base period of 4 quarters. Now I told you, right, that usually in the exam they don't ask you to work out the trend, because the trending is tedious. So either they give you straight away or they give you an equation. So in this case, examiner gave the student the amount already. So the moving average is already the trend. Okay, so they've given you the trend for 2011, quarter 1, quarter 2, 3, 4, and so on. Okay, the average seasonal variation. Now average for 2010 have been made available to you, that they are 0.908 for quarter 3 and then 1.082 for quarter 4. And the random component is negligible, so you can ignore it. Okay, now that's it. So the first thing that I'm going to do now is to do a forecast. So what is your step now to do a forecast? What do you need to find? Now the model is what? Y equals to T times S. You know T, right? You know T, right? So if you know T, you got to find S. And how do you find S? Y divide T. So that's the first step, right? Okay, now, so I'm going to start with that. This is June 2012. Okay. So first step, working to find seasonal variation. Now we have the year, the quarter. Now then your actual, your trend, your seasonal variation. Now we have 2010 quarter 3, quarter 4, 2011, quarter 1, 2, 3, 4, and 2012, quarter 1 and quarter 2. Now, so you got to fill in all the values, right? So it's all based on hundred of thousands, thousands of units, sorry. So I will have 900, 1001, 1002, 1000, 1050, 1003, 1004, and 1150. Okay? And now you know the trend as well. So the trend is given as 2011 is 1068.75, 1112.5, 1162.5, 1206.25, 1243.75, 87.5. And using that, you can work out what's your seasonal variation. 咁等我啦，係咁多啊，我會講邊啊？Right, so 1002 divided by this is 1.1228. Now the examiner said she wanted 4 decimal places. So maintain your answer with 4 decimal, okay? So 1000 divided by 1112.5 is 0.8989. 1050, 1162.5 is 0.9032. 1.0777, 1.1256, 'kay? And what's your next step? Now you've got your seasonal variation, but you can't use this figure because you still have not averaged it. So that's why the next step now is to find the average adjusted seasonal variation. Now we have been given quarter 1, 2, 3 and 4 for 2010, 11 and 12. So class, they told you the seasonal variation for 2010. They mentioned very clearly that 2010 is 0.908 and 1.082. Now this is given in the question. Then 2011, now the one you base on the figure that you calculated, right? So you take out 1228, 8989, 9032, 777, and 1256. Cái gì? Oxy à? Tú xe xuế à? Tham lo. You móc, you lo móc lại móc rồi. Hả? 幫我洗地啊？你愛洗就成間洗咗佢喎，唔好洗一笪啊！有冇相關嘢喎？1.1242 1.8961. .8112, 0.9056, 2.1597, 1.0799. Okay, so what you're going to do now is you must add up all the seasonal variation, right? Now this is only the average seasonal variation. Okay, then you must add up all the seasonal variation so that you see if the total will come to 4. Because in the long run, when each season cancel out each other, then there will be no more seasonal variation effect where y equals to t. So if y equals to t, then y divided t is equals to 1. That means every season will give back the value of 1. So you must add up to a value of 4. But if you try to add it up, okay, 1242, 8961, 9056. Now we don't get exactly 4, but we get 4.0058. So you will have to remove 0058. Okay, you remove 0058, then with that you will get what is your adjusted average seasonal variation. Now what is 0058 divided by 4? Well, it's going to be 0.00145. Okay. Now I only want 4 decimal points. That means I got to round. Okay. So in that case, I just round it by taking 0.0015. And then if that's the case, looks like the last number, you no choice but to take a balancing number, right? Okay, because if you have rounded this figure, then this has to be balancing. Zero, 013. Now this is my adjusted averaged seasonal variation. So you're going to get the answers now, right? So the last thing you're going to do now is what? What do you still need to do the forecasting? Y equals to T times S, right? You know the S now, right? Now what about, do you know the T? Do you know the T? What T do you need? What T? Which T do you need? The T for? Now you need to know what is the T for the last 2 quarters of 2012. Because you must take the trend for quarter 3, quarter 4. Then only you can multiply with the seasonal variation of quarter 3 and quarter 4. Now the trend figure I only have until where? I only have until 2012 quarter 2 only. This is my trend. So I need to find what is this figure and what is this figure. And how do you find that? You extrapolate, right? So extrapolate is very simple. You just take the last figure minus the first figure. So you know by how much that your trend has changed. Then divide by the number of times that the trend changed to find the average trend movement. Okay, so to extrapolate my trend, Now my average trend movement is 1287.5 minus 1068.75, and you divide it by how many times? 1, 2, 3, 4, 5. Okay? I mean, on average, your trend has increased by 43.75 per quarter. So I will be able now to finish out my answer. Okay, so my answer now, the extrapolated trend now, this was the last trend figure that I know of. Am I right? So it's 1287.5, right? That's the last trend figure that I know of. Now, using this figure, what do? You add 43.75 so we are getting 1331.25, and you're going to add again 43.75 and you get 1375. That's your trend. Then from the trend, what do? You multiply with the seasonal variation, which is 0.9041 and 1.0786. So your forecast sales quantity now it comes in thousand just now, right? That means now if I don't do the rounding, it will be 1203583 units. Okay. Whereas for quarter 4, 1375, it will be 14830.75 units. Okay. Okay, so this is what you're going to do now in part A. Now that part A, I really feel is a bonus 10 marks. If you really know the step, you should get 10 out of 10 already, correct? Okay. Now, so we're going to move on and look at B right now. Now B is the one that you're going to get a bit more difficult if you don't like writing. Okay. Now they ask us on what? The question say that what is the impact of the budgeting style and the inaccurate sales on the staff and on the business, page 91. Okay, so you're going to go on now. So the first thing that I'm going to do is I will start. I just discussed with you the point of what you're going to write. Okay, now I will start with telling them what budgeting style that they're using. I mean, if you don't start, then how do I know what style you're using? Correct now, so I have to start like that because the question they mentioned. So I will start by saying first, I will explain that the style used is impulse style. So this is my first point. Okay, so what do you mean by impulse style? Now you're going to say that it is a top-down approach of budgeting where budgets are set at the top level without consultation with the mid management, and then it will be imposed onto them. Now you refer to the case, because the case mentioned the managing director is the one who set the budget, okay, and then basically all the rest of the people will just have to follow. Okay, now so as a result of this, what happened? So what is the impact to? Now the question asks two things: the impact to the staff and impact to the business. So a style like that, what impact that you're going to see? Now the impact will include, like, for example, the worker become less participative. So motivation definitely drop, right? Because if you were in an environment that your boss never listened to you, now your boss never listen, if it's accurate, at least not that bad. Then never listen, some more is bad. That means the boss proved to be terribly stupid, right? Because, you know, so it's like this is one issue that we're gonna see. So the first point that I probably will say that number one, that there will be less participation is involved. So the employee will not be supportive of the budget. Okay, so they will not support what you say. Okay, so once if they don't support, then the morale level will drop, and it will make budget even more difficult to achieve. Now, even now itself is already unachievable, but it can be even more difficult now to achieve. Okay. Now, number two, the managing director is not aware of your constraint faced by the employee at the low level. And because you're not using a very realistic budget, the effect is it will become demotivational. Okay? It demotivates employee. Okay? So it demotivates employee because it's asking you to chase after something you know that you're never gonna get it. Okay? Now in the long run, the effect will actually be worse. Okay, so due to the unrealistic target, the bonus scheme becomes unachievable. Okay, so there might be a long-term impact to the staff when they feel that works are never being rewarded. Even though you know you're working hard, but you're never going to get a bonus. And you know the fault is not you, it's the system. In the long run, there's a lot of issues that you might face. Example, the worker may not want to stay long. Okay, so this might lead to high labor turnover rate. Okay. Now, behavioral wise, also we believe that if you practice in full style, it's like in a house, the parents always tell their children, I tell you this, you don't say, listen to me. Now after 1-2 times, you probably don't feel bad, but if always like that, what will happen to the children? You got things also you don't feel like saying to them. Because before I say, you don't say, you keep quiet, you listen to me. You see? So this is the issue that it might affect behavioral, that it might create a culture that employees will just listen, even though they know there's a problem, but they don't want to tell you. They will think that anyway, loss is your problem, I don't care. You see? So this may create a culture that the employees do not share their view. Okay, so it will become this kind of organization that you're having, that in the long run when you keep going on like that, and that will bring impact to the business already, right? Now first of all, the very direct impact that we see in the business is what? Now we notice that source over produces his product when the budget sales are too high. Okay, when you're going to produce a lot, there'll be a few problems you're going to face. Okay, now one problem is, we said just now, expired product. Okay, products have short shelf life, so it will lead to high level of inventory losses because of the write-off. Okay, so when you start writing off your product, you're going to suffer loss. Then number two, when you hold a lot of stocks, you're also going to have a lot of money tied up, working capital. Okay, so source will need cash to finance its inventory holding, which is excessive, because it will be something that is not nice, you see. Okay, so that you got to keep holding, you can't sell, so you will actually have a lot of working capital requirement, so it will increases the working capital requirement of the business. And of course, if you got no cash, means you end up borrowing. Okay, now when you have more inventory holding, that means it takes longer time to clear the stock. Okay, it takes longer time to clear stock, so it's likely that customers are buying old stocks with very short expiry. Okay, so what's the problem when the customers are buying old stocks with very short expiry? Now, they probably will feel like the taste is not as good as if it's a new stock. Okay, now of course customer might feel annoyed that I buy only, then after a while I got to throw it, especially if you can't finish the source on time. Okay, so all these are example of problems you're going to face, which in the future, what will happen? the customers may not use your product anymore. So you can go on and write, okay? Now we did mention that there will be a lot of high turnover. Now if there's high turnover in your labor force, then what will happen to the business? You're going to suffer labor turnover costs, right? For example, when the experienced staff resign, the new staff come in, they are not familiar with the system, then they will learn all over again, you're going to train them. So this is another problem you're going to face, that you will incur high labor turnover costs. So you elaborate, okay? You elaborate that what falls into high labor turnover, okay? Like training of the staff, when they become less efficient, okay? And so all these are the issues that you have for the business. Now I've given you enough point, okay? So you actually get 1 point that you elaborated about 2 marks. So you get about 5 points is enough to get 10 marks, okay? But I'm writing enough point for you, okay? That I've given you 8 points. Plus I explained the impose style, okay? Now in the exam you don't have to write so much, but you elaborate the answer, okay? You cannot just write short answer, elaborate the point, okay? Right, so these are questions that we see regarding forecasting, okay? Right, let's go on and look at another question. Okay, turn to page 97. Now that's the only questions on CBP that examiner tested, okay? So I'll discuss that with you as well, okay? So let you see that how she asked CBP. Now it's not very long ago, it's December 2012, okay? See the requirement. Now A, calculate the weighted average contribution to sales ratio. So they're asking for CS ratio, right? CS ratio. But what is weighted average? That means it's combined. You combine with a few things. That's why it's called weighted average. Okay? So the total average of a few things together. Okay. Then B, they say calculate the total break-even sales revenue. Now, break-even sales revenue. So it must be fixed cost divided by CS ratio, right? Okay, that means you're going to use the answer in part A to work out part B, okay? Okay, then C. Using the graph paper provided, draw a multi-product profit volume chart that clearly shows the profit loss line, assuming that number one, you are able to sell the product in the order of the one with the highest CS ratio first. Now that means you sell product by product, right? So this is one after another. And if you sell the product in a constant mix, that means you sell as a package. And note they say only one graph is required. That means you're going to do a 2-in-1. So the 2-in-1 basically is you have the same starting point, you have the same ending point. The only difference is what goes in between. Okay? So if it's constant mix, that means you just take the starting point and the ending point, draw a straight line. Okay? But if the first way, you have to show 3 separate lines for the 3 products we see just now. And then they say briefly comment your finding in part C. Okay, that's it. It's a very straightforward question. In fact, if you look at the requirement, I look at it, it's just like an example that we discussed previously in the class. Okay. Now, hair manufactures three types of electrical goods for hair: curler, straightening iron, and dryer. And the budgeted sales price and volume for the next year. So they've given you the selling price and the unit that they can sell: 110, 160, 120. Okay, every product is made using a different mix of the same materials and labor. Now, product XS also uses a new revolutionary technology for which the company obtained a 10-year patent 2 years ago. So the budgeted sales volume for all products have been calculated by adding 10% to last year's sales. So the standard cost card for each product is shown below. So we've given you that CSD, how much is the material one, 2, skilled, unskilled labor. Now both skilled, unskilled, they are variable. The general fixed overheads are expected to be 640,000. Well, it's very simple. It's just one fixed cost figure that we're seeing here, right? 640,000. Okay. Now, so the first thing is work out the weighted average contribution, and then B, the break-even revenue. Now you do that for me. Okay. Weighted average. You should know what is the mix, right? Usually the mix is based on what? Based on your demand, and the demand has already been given above, that if you can sell 20, 22 and 26,000 units for each. Okay. Now, so how do you count the constant ratio? Follow the demand. This thing actually 2 minutes or so you can finish it. You're going to calculate contribution, right? So selling price minus $12, $8, $16, $14, $28, $22, $34, $20, $16, $26, $22, $28. That's all I need, okay? It's not so difficult, right? So the contribution per unit Okay, you need to use a mix, a constant mix, so that you can show the weighted average. Okay, so the constant mix will usually assume with the demand. So I will assume that a sales mix is 20 unit, 22, 26. So the total contribution is 1002, 1232, so it's 3160. Okay. Now then, the sales at the sales mix. That means you take the selling price times the sales mix quantity. So 110 times 20 is 2002. 160 times 22 and 120 times 26. So you take contribution divide by sales times 100. That will be my CS ratio, or the weighted average CS ratio. 3160, 8840 is 35.75%. Okay, so it's not that difficult, right? That 6 marks actually is not very FI standard. It's not very FI. I don't see it's very difficult. Okay. Now B is even easier. That they're asking you for the break-even sales revenue. So what's the break-even sales revenue? Break-even sales revenue must be your fixed cost divided by CS ratio. So the fixed cost is 640,000. The CS ratio is 0.3575. So it comes to about 1790 210. Okay. Sorry, 2 decimal point. Sorry, 209.79. Okay, all right. Okay, now part C, just to finish it off. Now, I have two assumptions that I'm going to use. Okay. Now, the first assumption, if I'm going to sell product with highest CS ratio, now I'll put that as my working. Okay. So, product CSD. Now the CS ratio for C is what? Now you just use back the answer in A to calculate. C is 60 divided 110. So it's 0.5455. 56 divided by 160 is 0.35. And then the last one is 28 divided by 120 is 0.2333. So my sales rank, if you sell one by one, is of course C first, then S, then D. Okay? And how do you draw the graph? Now if you want to draw the graph, is you have to show one by one, right? That initially my loss is 640,000. So when I sell the first product, my loss will decrease from how much to how much. Okay? So this is my working, okay? Now, so initially my loss without sales will be 640. Okay, I'm going to sell product C. Now, how many units of C that I'll be selling? 20,000 units. So 20,000 after I sell, and how much will I be getting then? 60 times 20,000 is 1.2 million. And that means you sell one product, you already break even. Okay? Now that will bring me to 560,000. Now this is my cumulative quantity, because later I will keep adding from here. Okay. Now, so when I sell the next product, okay, I'm going to sell product S, which I have another 22,000. Now when I sell another 22,000, I will increase my contribution by how much? 56 times 22 is 1232. Now that means cumulatively, my quantity increased from 20 to 42, right? And 42,000, my profit become 1792. Okay, and finally, when we sell product D, which is 26,000 units, I'll be getting another 728. Now, if I add another 26 to the 42, that means cumulatively we sell 68,000 units. And then my profit will go up to 2520. Now, so for C number 2, okay, for C number 2, you should know that if your quantity is 0, your loss is 640. I don't need to calculate again, right? In fact, once you can draw the first graph, the second graph, you don't need to do anything, you just connect the points. So if my quantity is 0, my loss is 640. If my quantity is 68,000, then my profit in total is 2520. So you will have the same starting ending point. Okay, you're gonna get the same starting ending point as what you're gonna see above. Okay, now we draw and see. So let's get ready with the scale. Now value wise, I need to go up from 640, 640 all the way up to 2.52 million. Okay, so if you want, I can just use 2 cm for every 500,000. It's up to you. Okay, you just follow a scale that you prefer. Three, 2.5, 2, 1.5, 1.5. And I'm looking at in total 68,000. So I can use 2 cm for every 10,000. Okay. Okay. Start. Now, so if my sales is 0, my loss is 640. Okay, where is 640? Now how do you calculate? This is 2 cm, right? 2 cm is for 500,000. So 140,000 out of 500. That means 140 divided by 500 times 2 cm is 0.5. 56 cm. That means 56 mm. 56. So it will be somewhere around here. Okay, that's how you calculate to determine which point you're going to use. Because in the exam, what scale can you use? So that's how you calculate again. Because 640 is 140 from 500. So 140 out of 500 times 2 cm. So 140 out of 500 times 2 cm. So it's about 5.6 mm. Okay. When your sales quantity is 20,000, now class, this is 20, what? 20. So when your sales quantity is 20, you will get 560,000. That means 500 is here. I add 60 lah. Okay, what is 60,000? 60,000 out of 500 times 2 cm will give me about 2.4 mm. 2.4 mm. So it's very small only, okay? So you're gonna get 2.4 mm. So 2.4 mm, possibly is like that lah. That's the point. Okay, so this is where I'm gonna get the first point. Which actually is about 10,667, okay? This is 10,667. How do I know? Because my break-even point is from the first product. The contribution is $60. That means if you take 640,000 divided by 60 is 10,667 unit. So this must be 10,667 unit. Alright? Okay, go on. Now when I join the second product, my unit will be 20 to 42. 20 to 42. Okay, so 20 to 42 will be from 560 go up to 1792. So 42. This is 40, right? So where is 42? Now 2,000 out of 10,000 times 2 cm is 0.4. That means it's 4 mm. Okay, 4 mm. Right, that's your 42,000. And the amount is 1792, class, 1792. So it will be from 1,005 go up by 292,000. Okay, 292,000 out of 500 times 2 cm. Out of 500 times 2 cm. So you should get about 1.168, nearly about 12 mm. Okay, nearly about 12 mm. So that means 7.2. So that's your point. Okay? Product C product S. Now usually the last one is the easiest because you're just going to finish it off to 68,000. So 8 out of 10,000 times 2 cm is 1.6. So this is 1.6. Okay, it's 1.6, and your profit is 2520. That means 20,000 out of 500 times 2 cm is 0.8. $10.8. Product D. Now you should label the product so that we know each line represents a different product. Product S and product D. Okay. Just drawing a straight line to indicate that it's for different products that we're having. Alright, now the other graph that you're going to draw, now this is graph for C number 1. So just label it, graph for C number 1. Now graph for C number 2 will always be the same starting point to the same ending point. Okay, now, so this is your break-even point that you only sell 10,667 unit of C. Then the other one is the other break-even point. Now what break-even point is this? Now this is based on if you sell in total. So if you sell in total, then actually if you calculate, if I calculate this, I'm going to take 640,000 divided by 3160, which is 202.53 set, and every set made up of how many units? 20, 22, 26. 20, 22, 26. So you actually get 13,772 unit in total. Okay, then you have to take this amount and you split it out again. That means you will split back into the 3 products according to their ratio, their mix. That is the graph. That's it. Okay, so that 9 marks are just given to draw a few lines over here. Okay, all right. Now they asked us in the last part that briefly comment your finding in number C. So what do you found in number C? Now, the findings we can see is you have different break-even point. Okay? Now, if you're done, we go on. Okay. So, part D, comment. Okay. If hair sells based on assumption in C number 1, then its break-even point is by selling only 10,667 units of product C alone. Now, but if hair cells in a constant mix according to the sales demand, then the total sales quantity to break even is 13772, which comprise of, now we have to break up the quantity, right? So if you take 13772, then you multiply by 20 out of 2, so it's going to be 68. So you're going to get 4050 or 51 of C, then four, 5, 6 of S, and 5, 2, 6. Now I mean if I have to round it, it will be 65 of D. Okay, now, so meaning the margin of safety for assumption C1 is greater and pose lesser risk than C2. But I don't think there's an issue because anyway their margin of safety are very big. Okay. However, both assumption have relatively large margin of safety as it has break even at the early stage of the sales. So the risk to hair co is low. Okay, I mean from observation wise, this is what we can see. Okay. Right, that's the example of the break-even. Right, let's turn to page 84. Now, this is a question on variant. Okay. Now, this kind of variant are considered as the more important one now when they work on mix and yield. Okay, planning operational. All right. Now, the 20 marks question, I will only look at part A with you. Okay. And not that the activity-based variant. Now, the one examiner has taken up. Okay, so this is already not in the syllabus anymore. Okay, so activity-based variant. And anyway, that's the only part that they have asked in the past on activity-based variant. Okay, I don't need to show. And we have not covered ABC. It's still probably today we'll see that. Okay. Now then they ask you to look at the steps in ABC, which I won't do with you first. I just look at A first. Okay. Now they just want us to calculate the usage variant, the mix variant, and the U variant. So it's a very fair 12 marks on calculation. Okay. Now the question starts like this. They say that Choco, it's a company which manufactures and sells 3 types of biscuit in packet. Now one of them is called Oos and contain 3 types of sweetener. Got honey, sugar, and syrup. So the standard material usage and cost for one packet, they tell you is 20 gram, 15 gram, and 10 gram. So the cost per gram also given. Now it's gram and per gram. Okay. Now so if gram, then okay lah. If not, then you see got gram and kilo. Then you convert. Okay. Now in the 3 month ended 30th November 2011, Choco produced 101,000 unit. That means 101,000 packet lah. Okay. That they use 2,200 kilo of honey, 1,400 kilo of sugar, and 1,050 kilo of syrup. And now they say that 1,000 gram is 1 kilo, which I find stupid. The examiner needs to say that. Okay, I mean your level cannot be you don't know one. Correct. Okay. Now Choco has used activity base to allocate its overhead for a number of years, and one of the main overhead is called machine setup. And in the 3 months, the following information was given. So you give it the budget as well as the actual. Now that one I don't need. Okay, that means to calculate part A, I will only need this part. Okay, I only need this part. Okay, now in fact, if you understand variant, mix plus yield must equal back to usage. Or mix plus yield will equal back to usage. So some people, they actually don't calculate 2 times. Rather, they calculate the mix and the usage. Then they total the variant and give the mix and the yield. Then they total the variant and give the usage. Now I cannot tell you how examiner respond to this. Okay, so I would suggest that you follow the sequence. If the question say I want usage, mix, and then yield, then understood the examiner must have expected you calculate this. Now if not, I would have said I want mix, yield, then usage. Then if you follow the sequence, you combine, is okay. But if you start with usage, I don't see how you're going to combine, right? Okay. Now if you go and combine, yes, you might get mark for the final answer, but you may not get 4 mark. Sketch, she say that the workings are not given in full. Okay. Now, so the first thing we do is the usage. Who is eating egg? Egg is it? No. Eat alone. Curi makan. Okay. Now, 1. Okay. Material usage variant. Alright, now the usage variant is which part of the variant? Left or the right? Standard price, standard quantity, actual price, actual quantity, standard price, actual quantity. So the usage variant is the left hand side of the variant. Now I will put down the formula here because we have 3 material. So I'll just show you the formula. Standard price times standard usage actual output, standard price times actual usage actual output. Now that will give us usage variant. Now we have three material: honey, sugar, and syrup. So I fill in the blanks. Now the actual usage is given as 2,200 kilo. So somehow I still need to convert because it's kilo. Sugar 1,400 kilo, and the syrup is 1,050 kilo. Okay, give me the price for honey. What's the price for honey? Standard price. How much? 0.02 but it's per gram. This is kilo. You must convert it. So once you convert, the price for honey become how much? 20 per kilo. Okay, you have to use kilo to kilo because they've given you usage in kilo. Kilo. So what is my standard usage actual output? Now standard usage is 20 gram, right? 20 gram per 1,000 is 0.02. Okay, 0.02. And how many units I have produced? 101,000. That means it's 2020. 2020. Okay, I show the working here because you take 20 per 1,000 times 101,000 unit. So 40,400 and 44,000. So your usage variant is 3,006, and this is adverse or favorable? This is the actual. Your actual is more. You spend more. Spend more is good or not good? It's not good, right? So this is adverse. Okay. All right. Now the sugar wise is $30 per kilo. Now the standard usage is 15 gram times 101. That means 1515. Syrup will be $25 per kilo. And then the usage is 10 gram for 101. So it's 1010. Okay? Now, so you work out the total. And find what is your usage variant. Okay? Alright, now that one not so important. Okay, so this is the first case. Okay, for the mix and yield, now that's the important one. You will have to apply the formula. Fair enough. You have to apply the formula that I've given you before in the class. Now we just need a table, right? That we show what QM. Standard quantity, standard mix. Actual quantity, actual mix. Then life goes up, come down. Actual quantity, standard mix. Add standard price. And you have three material: honey, sugar, syrup, total. So you will get me the yield variant and the mix variant. Okay, so your job now is about filling in the blanks. Try this. 2 minutes. The smell come from uncle. Uncle is cooking food. Okay, let's fill in the blank. Now, actually, if you got the usage variant, the numbers are quite easy. Because a lot of things come from that. Now, you see the standard price is 20, 30, 25. Now, the actual quantity is 2,002, 1,004, 1,050. All there, okay? Now, 22 plus 1,004 plus 1,050 is 4,650. So this must be 4,650. Then you break up into what we call as standard mix. Now, the standard mix is according to your ingredient mixture. It's 20 out of 45, right? and then 15 out of 45 and 10 out of 45. So if you take this fraction and divide back, you should get 2067 1550. Then the last one will obviously be a rounding figure of 1033. Okay, then your standard quantity for your actual output is the quantity you calculated just now, is 2020, 1515 and 1010. The means is 4545. So 940. Now negative, adverse, right? 1515, 1550 times 30. Now if your yield is adverse, everything is adverse because the yield is in total. So 10101033, 23 times 25, 575 adverse. So in total, your yield variance is 2565 adverse. Okay, the mixed variance 2067 minus 2002 times 20 is 2660 adverse. Now that's why in total is 3006 adverse, your MUV. So if you add up, then you're going to get the same answer as what you've got in A number 1. Then for 1550 minus 1004 times 30, favorable variance. Then 1033 minus 1050 times 25 is 425 adverse variance. Okay, now again I can probably, if we ask to explain the performance, again you can see the picture now is what? They have changed the mixture, that they have actually used less sugar, correct or not? Which is more expensive. Which I think the logic is why you want to use less sugar, which is more expensive, so you save cost. That's why they use more honey, alright? Then they use more syrup, that the price is cheaper. So as a result, the mix become favorable. So if you add up all the three, the mix in total is favorable. But if you look at the yield wise, you actually end up using more ingredient than what you need. Now, so is actually the net variance good or not good? Now, you actually get 1415. Favorable. That means the net variance is not good. Okay, so you end up suffering more losses. Okay, that's it. There's no interpretation. But if the examiner will ask you to interpret, I strongly think that is what I will do just now. Okay, that you just talk about why the performance is like that. Okay, now that's it. So just show you how mix and yield been tested. Okay, now we turn to just one page before that. Look at page 84. Now we covered transfer pricing. Okay, so I think it's good that if we take a look that how transfer pricing was tested. So if you turn to the page before, page 82, okay, there's a questions on TP. Now, I always find that questions on TP, okay, question on TP, questions on performance management is often not so well answered by the student, because they find that there's a lot of information that you need to interpret. So that's why when it comes to doing the question, a lot of you say that I don't know how to start. Okay, now so it's just a matter of practice and understanding what they want, and then you slowly get used to it. It's not really that difficult. Now you see part A of the requirement. Now they say over here that under the current transfer pricing system, prepare a profit statement showing the profit for each of the division, and for BAT as a whole, and your sales and cost figure should split into external and interdivisional transfer. Now anyway, it is just 6 marks only, so it's not a lot, huh? It's just a 6 marks requirement. Now usually we do transfer pricing, we need the P&L later to advise, huh? Okay, so that's part A. Now B and C, we come to that later, huh? Let's look at what is A first. Okay, the question says that BAT is a company that is specializing in the manufacture and the sale of bath. Now each bath consists of a main unit plus a set of bath fittings. The company is split into 2 divisions, A and B. Division A manufactures the bath and Division B manufactures the sets of bath fitting. So currently all the Division A sales are made externally. Division B sells to Division A as well as the external customer. Now that means if you look in the diagram, it will be B sells to A as well as external, and A only sell to external. Okay, go on. Now the following data is also available for both divisions. Now Division A, they tell you that the selling price per set of bath, each bath is 450. Okay, cost of the bath, they say, okay, you're gonna buy from B, right? Because every bath must have the fitting. The fitting you buy from B. So B sell you at $75. Okay, that's the transfer price. B is selling you at $75. Okay, then your other materials will cost you $200. Your labor cost will cost you $45. Alright, the annual fixed overhead is 7.44 million, and then the annual production and sales of bath, okay, your annual production and sales of bath is 80,000, and the maximum annual market demand is also 80,000. Okay, alright, now B, they say the current external selling price per set of fitting is 80. That means if you sell to outsider it's 80. Now if you sell to your own division, it's 75 Now that one we know already just now. Okay, now the material is $5, labor is 15, overhead is 4.4 million. Now the maximum annual production and the sales is 200,000 units a year, and the maximum annual demand externally is 180, and the maximum annual internal demand is 80. Okay, now the transfer price charged by Division B to Division A was negotiated some year ago before the previous divisional manager, who have now both been replaced by new manager. Now the head office only allow A to buy from Division B. That means you don't have a choice. Okay, whatever price set, you have to buy, because the head office, you say you have to buy from B. Okay, now although the new manager of Division A believed he could obtain the fittings of the same quality and appearance for only $65 per set if he was given the autonomy to buy from outside. So now the division manager felt unhappy because you charge me $75, I can buy at $65. Okay, now Division B makes no cost saving from supplying internally than sell externally. That means the costs are the same. Okay, now so I would like you to start with this. You try and work out for me. I just want a P&L. It's very easy. Okay, now show me the profit statement that per division and in total. Okay, right, so Division A, Division B. total. Okay, I'm not bothered about the total. Total is just to add together, okay? So you can put the total in. Right. So I'll show you how to start. You need your sales, so externally and interdivisional. Okay, that's how you start, and then you minus your variable costs. Have all the variable costs in, and then you get contribution. Then you minus the fixed cost. Then you get a profit. Okay, that's it. Okay, just work out for me what's the profit and loss for interdivision and total. see. Now, the issue is you can have only 80,000 of demand in division A. Okay? 80,000 of demand in division A, selling at the price of 450. So then division A must buy from B, right? Because the question said there's a policy. That means B must sell to A lah. So if that's the case, then there will be 80,000 at 75. Okay. Okay, if it's 80,000 at 75, then the issue is B in total, your annual production is only 200,000. So if annually 200,000, meaning you can only sell 120 at $80 externally. You can't sell more than that because your capacity is only 120. Okay. So with that, my sales would be 80 times 450. So that's 36 million. Okay. 120 times 80. Okay. Now, okay, variable cost. Okay, first division A will have to pay the transfer cost. So this 6,000 is your cost here. And then you have to pay cost for other material as well as labor. So material cost and labor cost. Now the material cost is the number of unit that you're having. So it's $200. 80 times 200, and then division B is 200,000 times 5. Okay, 200,000 times 5. Okay, labor wise is 45, then 200,000 times 15. So 80 times 200 is 16 million. Then 3.6 million. 1 million. And 3 million. Okay, now you put the total yourself. So this is my contribution. 36 minus and we only have one fixed cost, right? So the fixed cost is 7,440, and the other one is 4,004. Right, that's the net profit. Okay, so the total, of course, at the end is the most important because we need to see later on to the group what happened after the transfer pricing issue. Okay, right, that's it, 5 marks. Now the main mistake that students usually see is they didn't take 120 for the sales. They instead take 180. That means if you do like that, you forgot about the maximum capacity. Okay, but if you have taken that right, usually there's no problem. Everything else should be correct. Okay, now this is part A. Now let's move on to the issue now in part B. See what they're asking over here. Okay, now the second part is they say calculate the maximum profit that could be earned by BAT if the transfer pricing is optimized. Now you see, they are not asking you for the price, they're asking you for the maximum profit. So actually end of the day, whatever price you take is only inter-division, intra-group. But when you consolidate the result, you cancel off one. So at the end of the day, how much you charge, it doesn't matter. The important is what? The decision is the right one. For example, if you are supposed to buy, you buy. If you are supposed to buy outside, you buy outside. As long as you make the right decision, then the profit will always be maximized. Okay? Now, so they are saying that this head office is considering changing the transfer pricing policy to make sure that the maximization of companies' profit without demotivating either of the divisional manager. Now, Division A will be given autonomy to buy from external supplier, and Division B to supply to external supplier in the priority to supplying to Division A. So that's the case. Alright? So now they want you to work out again the new profit if the transfer price is optimized. So I believe that they say the $75 is not the right one. Okay? So if $75 is not the right one, then what should the price be? And by using that new price, what should the new profit be? Okay? You try this for me. See how you're going to solve the problem. You just think and what you're going to do. Alright? Remember I told you that there are two ways of developing transfer price. Okay? You see whichever way you want to use. Okay? Whichever way you want to use. Okay. Now, okay. There's many ways of how we can do it lah. Now, discussion only. Okay. The simplest way to ensure optimized decision is to control the seller transfer price policy and let the buyer decide. Okay? Alright, the simplest way is to control the transfer pricing policy and let the buyer decide. Now, what policy is that? Transfer at your variable cost for your spare capacity, and then transfer at variable cost plus opportunity cost for the capacity that is having limiting factor, the mean is being used up. Now if you use this policy, so division B should do what? Now you should transfer 20,000 unit at the price of 20 because it's a spare capacity. Because my total demand is 180,000 from outside. My total capacity is 200,000. So the most is 20,000. I got extra. That this extra, okay, if you want, anyway I can't do anything. So if you want, I sell to you at no cost. Okay, so that will be at $20. I sell to you at $20. Okay, then transfer any additional unit at what price? Now if you're going to transfer at your variable plus opportunity cost, that means you transfer at selling price already, because there's no saving from internal transfer. Okay, now since there's no saving from internal transfer, you will transfer at $80 per unit. Okay, what will be the resulting decision? Now, division A will find the 20,000 unit from B at $20 the cheapest, and will buy from B. Alright. Now only the 20 will be the cheapest, right? Because the rest division A can buy at how much? 65 won. You charge me how much? 80 won. Obviously I think 65 is cheaper. Okay? Now the rest, for the rest, division A will find that buying externally at 65 is cheaper than from division B 80. Okay, now, so in that case, division A will buy externally, then allowing division B to meet fully. Its external demand. So the impact will be division B sell 180,000 externally and 20,000 unit to A. Division A buy 20,000 unit from B and buy 60,000 unit from external. Now, you won't get this answer at the back, okay? So, as I say, there are two ways of doing it. So which way you want in the exam, okay? End of the day, you got to see, okay? So, this is always the easiest way, okay? Because you just set according to the rule, alright? Now, end of the day, whichever way you use, your answer is the same because the examiner is not asking for the transfer price. The examiner is asking for the maximum profit. So the profit must be the same one because end of the day, the intra group is cancelled off. Alright, now, so I'll go on and discuss with you the second way, then only I show you the profit. Okay, now. Done. Okay. Now, alternatively, both divisions are allowed to negotiate for the transfer price. Okay. Now, division A is likely to quote transfer price of $65 or lower since it has offer externally. Correct enough? Now, division B is likely to reduce the selling price for the 20,000 unit below 65 so that A will buy from B. Which makes sense, right? Because you tell me you can buy outside 65, huh? So if I sell you 70, you won't buy from me, right? So if that's the case, then you probably will have to quote below that, no? But you'll be thinking, I don't have to quote everything, right? Because the rest of it, I can sell at 80. Why should I sell to you cheaper? So in that case, then I say, okay, I got 20,000 units. If you want, I sell you 60, right? 60 also can, 50 also can, up to you, okay? But usually you won't sell below your cost, okay, you know? So let's say you sell at 50 or you sell at 60 okay? Now, as the balance, B will be able to sell externally at 80. It is unlikely that B will sell at 875 rather at 82. So A will buy the balance externally at 65. Now, so what result you're going to see is the same as just now already, right? At the end of the day, you come back to the same outcome, that I will buy 20 from B, I will buy 60 from outside. So the outcome was the same, okay? But of course, the only difference is here, you end up negotiating, which you might take a lot of times to bargain, okay? Now, so this is the outcome. Okay, so how much will the maximum profit be? Okay, how much will the maximum profit be? Now, if you want to calculate the maximum profit, so one way of calculating is you work out all over again the P&L. That means you show again that division A and division B. Alright? Now, division A and division B and total. This way of doing is always the easiest, because usually you do like that if you don't have a problem to think of what to use in the number. You just follow back, okay? Now, I will have my sales externally and internally, okay? Now, if I'm going to follow this example, I must use the figure I say here, okay? So now my example says that I will sell externally. Now my sales is the same, right? Just now is 36 million. Okay, division B, I will have sales of 1440. Am I right? Because you sell everything to external, ma. And then internally, you only sell at $50. Just now you say $50 times 20. That means your sale is only 1 million. Okay, so the cost, now transfer is only 1 million. Buy externally is at 65. So 65, you buy 60,000 units. The cost to you is 3.9 million. Then your material cost and labor cost. Now material cost is the same, right? Because you have 80,000 times material cost of 200, so 16 million. And then labor cost is 45, so 3.6 million. Now division B, your cost just now is, now you still make the same quantity, so it's still 1 million. The labor is still 3 million. Okay, so as a result, your contribution will be $11,500 and $11,400. Okay, then you minus your fixed costs, which just now we see is 744 and 44. $4060, 7,000. Okay, we get 11,060. So the maximum profit is 11,060, which is much higher than just now calculated as 10,160. Okay, now if you calculate this way also can. Again, because we say if you can see incremental, you use incremental also can. Now incremental is you just ask yourself, like, as a result of this situation, what is the change? What change do you see? What is the change? Okay, the change is division B will now sell external 60,000 unit. Okay, you will sell external 60,000 unit. Okay, when you sell externally 60,000 unit, you sell at $80. Your cost is 20 ma, so your contribution is 60 lah. So you get back 3.6 million. But you don't forget, you not just sell external. You sell external, you lose that. Because by right you sell to your own, now you lose that sales already, so you must take into account. So you have lost the sales to A, which is 60,000. That is at $75. So you have lost 3.3 million. And then what will happen to division A? Now division A will save the money. Okay? Now why do you save the money? Because initially you buy 75, now become 65. Because you buy from outside, what? Oh, you buy from outside, initially it's 75, now it's 65. So you save $10 lor. So you save $10 for the 60,000 unit lah, because the 60,000 is what you're going to buy from outside, what? So that will give you another 600. That means the difference is 900 long. Now the original profit, just now we calculated, was 10160. Now become 11060. So actually it's the same way of doing it, okay? But some people look at this sort of question, I mean this way I answer, wow, very confusing. Like, don't know why you use this sort of figure. That's why I said if you find incremental is not easy, then don't need to do incremental. You do again only. Because you do again, you compare lah. You compare now and before, then you will see the difference already. Can see or not? Okay? Now anyway, examiner is just asking for what? The maximum profit. So actually, if you don't think so much, you just calculate the maximum profit. It's very simple. Okay? Now, so this is the situation that we're having now. So that is part B. Okay, now they ask you in part C, they say, discuss the issue that when you encourage the divisional manager to take decision in the interest of the company, and then provide a reasoned recommendation of a policy that BART should adopt. Okay. So the issue, now the point that we see is very simple. All managers are self-centric or self-oriented in the sense that they want to maximize their own performance, i.e. that means is divisional base rather than company as a whole. Okay, so it will be divisional base rather than company as a whole. Okay, now see, if the manager are taking decision in the interest of the company, it is likely that a decision that is good for the company as a whole is bad for the individual division. So what will happen? So consequently, it will become demotivational. Okay? Now, so if you give full autonomy to the divisional manager, it can be motivating, but there's always a risk that the manager will not act in the best interest of the company. Now, if you look at the case, see, division B will feel demotivated after your proposal in B. Alright, huh? Because it has lower divisional profit. But that's because if you allow divisional A to decide where to buy, then they can come and pressure you on the price. That's why you cut the prices now, and after you cut the price, that's the reason why you earn less profit. So this is a problem. But in fact, it's good. You're selling more customers now, but to divisional B, it will be demotivational as a result of this policy. Divisional B will probably think that it's actually even better. I don't mind sell it at 75. Okay, so even though I sell lesser, but I feel better because at least I don't have to give you discount on the 20,000. Because now that is the case that we're having. Okay, now so they ask you that, is there any recommendation that you can give to bar? Now usually the recommendation is still the same. We can still ask them to adopt into something like what we propose in B, but we must change the way of how you assess performance. Because if you assess performance on divisional profit, of course they are unhappy. But if you change the way how we give bonus, we tell you that the bonus is not just look at your own profit. We look at the group profit. If the group profit go up, I give you more bonus. Then the manager will feel that then I think I want to do it. Because so we should implement B to ensure optimized decision. Okay, but we should also revise or revamp the performance assessment system to have a fair way to reward manager. So example, each divisional manager has a share of the reward according to the group's performance rather than just the divisional performance. Okay, right, so that's how examiner asks TP. Okay, so you can see that's the style, because in the class when we do the example, sometimes you cannot imagine that what kind of questions that they can ask. So this is a good example of let you see that is how examiner can ask TP. Now not only this question, there's a few questions that she asked before. Okay, right, I think we stop here, then you can take a break. All right.